Hey yo, what is going on, viewers of the tube? My name is Tyler and welcome to your favorite crypto channel that attempts to uncover the truth by doing the digging. My life's ethos come from Sir Joseph Dirte. Life's a garden, dig it. And home is where you make it.
No. Home is where you make it. Home, where you make it.
Oh,
Everybody know that. Goddamn, boy.
guy likes to see homos naked. That don't help me.
You know the drill, it's time for Chico Crypto. Bakkt finally went live yesterday, and from the looks of things, in the short term, the Bitcoin price will be breaking out of the 5-month symmetrical pattern because the Bitcoin price is under 10K, and as of shooting this video yesterday, started to get into the $9,800 range. Monday the 23rd started out within the pattern with the BTC price above 10K, and even when the first Bakkt trade was executed, the price was at $10,115. But then the Bakkt dump came, and throughout Monday, the price deflated due to the downward pressure. Although even at 9,800, Bitcoin is still barely hanging on the lower support, meaning things aren't all doom and gloom yet, and this pattern could resolve itself soon. So how did Bakkt perform throughout the day? Well, there were two main contract options for Bakkt, the short-term speculation daily futures contracts and the long-term speculation monthly futures contracts. If we check out the monthly contract data, it looks like 51 contracts have been executed, which totals to 51 Bitcoin. One contract equals 1 Bitcoin. This would mean monthly contract volume is only about $510,000. Now, I shoot these videos a day in advance, so by the time this video drops, there will be another full day and a half of trading. I'm going to guesstimate 180 monthly contracts by the time this video is edited. We will see if I was correct. Then if we go to the data for the daily contracts, it looks like no data is available for this product, which means no volume. And this may be because the daily contracts did not launch or no one wants to speculate short term. It may update with volume tomorrow. We will have to see. So how does this first day of trading compare with a similar product launch, CME Futures? Well, I did a video on this posted last week and got the data on how many contracts traded hands with CME's first 38 days. How did these do in their first months of trading? Well, CME Futures were hyped like Bakkt, and the institutional traders knew they were coming. Here is the first liquidity report put out by CME, and as we can see, since their launch, they were averaging about 1,604 contracts per day, or about 79 million per day, which is highly respectable for the first 38 days of launch. They had on average 1,604 contracts per day, or a total daily volume of 79 million. Even if by tomorrow Bakkt hits the upper level of my prediction of 180 contracts, that would only be volume of around 1.8 million. Not even close to CME's 79 million. But there is a big difference between Bakkt and CME. CME is cash settled and delivered futures, while Bakkt is Bitcoin settled and delivered futures. CME works like this. Traders can either open long or short positions, where they agree to buy or sell an asset on a specific date. With CME, this is 5 paper Bitcoins, which are backed by cash. Bakkt works like this. Traders can either open a long or short position where they agree to buy or sell an asset on a specific date. In Bakkt's case, it's 1 Bitcoin, backed by a Bitcoin. With paper Bitcoin contracts from CME, this diverts demand away from the Bitcoin spot markets, while also increasing the total supply of Bitcoin beyond the actual Bitcoin in existence. Although Bakkt combats this, as the trading and settling happens in BTC, adding to the spot markets and abiding by the actual economic rules written into the Bitcoin code. Now, here's the thing, people. Bakkt is going to show the world if institutions are actually interested in Bitcoin and the technology behind it. There's already CME out there for big players if all they're interested in is playing around with speculating on the price. Bakkt's success will prove institutions see actual Bitcoin as a hedge against a traditional financial system. Its failure wouldn't be a good sign, as it's our Luke Skywalker against the Darth Vader that is CME. Darth Vader, CME, what do I mean? Like I mentioned, cash settled and backed CME Futures is making Bitcoin out of thin air. Since launch, CME is now doing on average 4,580 contracts per day, which means 22,900 Bitcoin per day, because their contracts are for 5 BTC each. That means on average over 700,000 paper, aka fake Bitcoin, are traded per month. So back before CME's launch, in November of 2017, chairman of CME, Leo Melamed, had an interview about the launch of its product, and in it he gave some clues into their plans. He said, "We will regulate, make Bitcoin not wild nor wilder. We'll tame it into a regular type instrument of trade with rules." Bitcoin isn't some wild animal that needs tamed, but according to CME, they were going to be bringing out their animal tamers to get Bitcoin under control. And all the way back in January of this year, while I was more clean cut and shaven, I let everyone know a little secret about CME Futures. Now, I will let you guys on a little secret that CME doesn't want you to know. CME and even CBOE are paying people to do this to the price. From this quote on the Financial Times, both CME and CBOE have sought to build liquidity by paying high volume traders. In August, CME extended a program of rebates for Bitcoin market makers until at least February 2019, a regulatory filing showed. So Chico did some digging and I found the document. The program started on March 5th, 2018, and it might end on February 28th, 2019. As we can see, they already extended it once. The incentives are not known and I couldn't find them, but they are predetermined. CME was paying traders to trade them. Yes, paying people to contribute volume to the exchange. Most likely downward pressure as Bitcoin was at 20K, its peak, and they were going to pull off the big Bitcoin short. Well, that volume market maker program was extended once again, approved by the CFTC and SEC to go until February 29th of 2020. Now here's the proof that these market makers, large hedge funds, and traders were getting ready to bet against Bitcoin, as Bloomberg interviewed them before the launch on December 4th, 2017, and they saw it as one of the greatest shorting opportunities in history. And that is exactly what happened. Bitcoin got crushed after the CME launch on December 17th. As CME contracts grew, the Bitcoin price went down, resulting in the bottom of 83% loss since the launch. This even prompted the Federal Reserve Bank of San Francisco to put out a letter attributing the futures market to crashing the Bitcoin price. In that letter, comparing it to the rise and collapse of the home financing markets in the 2000s. Here's what I want to go through at the end of the letter. Their conclusion. They say, "We suggest that the rapid rise of the price of Bitcoin and its decline following issuance of futures on the CME is consistent with pricing dynamics suggested elsewhere in financial theory and with previously observed trading behavior. Namely, optimists bid up the price before financial instruments are available to short the market. Once derivatives markets become sufficiently deep, short selling pressure from pessimists leads to a sharp decline in value." Now, pre-CME Futures, BitMEX, and the like, there were no major options to short Bitcoin. The only way to be bearish was to sell. Futures, derivatives, and more are becoming deeper and deeper by the day, and this will lead to a sharp decline in value. Was that sharp decline the crash from 20K to 3K, or are we in for another? Well, what we want to see is growth from Bakkt and not CME. But CME is gearing up even further. Earlier this month, they filed to allow their paid-for traders to hold a greater number of open positions at one time, jumping from 1,000 spot contracts per month to 2,000 for any single investor, meaning up to 10,000 worth of Bitcoin or $100 million for a single person or fund. Then they are launching Bitcoin options in early 2020, providing clients with additional tools for precision hedging and trading. And these CME sharks have an appetite for paper Bitcoin trading, as it's the second most heavily traded asset at CME when measured by the volume and open interest ratio. All I have to say is Bakkt, you need to hurry up and get juvenile and back that ass up.
Girl, you looks good, won't you back that ass up? You's a fine motherfucker, won't you back that ass up?
Cheers, viewers. I'll see you next time.